Caleb Silver, editor-in-chief of Investopedia, and Jim Woods, editor of Intelligence Report. Caleb, good to see you. Thank you both for being here. Caleb, I'll start with you. You know, it seemed so obvious, right? When we looked at digital advertising, it was cruises, it was airlines, it was booking a trip. A lot of that advertising is going to be gone, right, Caleb?
Right. That's a huge part of the spend. So that discretionary spending, especially leisure, especially travel, especially food, dining out, is out of the picture. And then you take out sports programming, which is actually a big deal for the Twitters of the world. And you have no advertising against sports right now because we have no live sports. So sports has been a big deal out of that mix, but so has that leisure and hospitality and transportation industries. Haven't seen a car ad in a long time. Haven't seen a cruise or a travel ad in a long time. That's going to eventually come back. And of all the platforms here, Facebook's probably the one best positioned because it has those multiple platforms where they can reach advertisers. But the drop-off has been significant, though I do see it coming back pretty fast.
So Facebook may be in a decent position. Jim, what do you think?
I agree with Caleb on the Facebook front. As a matter of fact, this morning, I issued a buy recommendation to my subscribers for Facebook. And one of the reasons why is because they're growing. This COVID-19 shelter-in has seen their average monthly users grow. Now, of course, the revenue's down, and for the reasons that we all know. I mean, what media company isn't seeing a contraction in advertising these days? Because no one can go out and buy your stuff anyway. So it's understandable that the revenues would be down, but that is, to me, not a worry. And if you look at the share prices of all of these companies, Wall Street realizes that as well, because everything's been up nicely year to date.
Yeah,
Jim's
Jim,
point,
just why don't you expand it? I mean, when you look at this, go ahead, Caleb, please.
I was just going to say Facebook's ad sales were down 17% in the first quarter, but in April, they said they were flat from a year ago. So it's already rebounding. And again, it has the Instagram platform. It has Facebook proper in the app. It's got a lot of places to advertise. So I agree with Jim's point.
Yeah. For the second time, I bought something on Instagram. I did it once last year, and I did it once this year so far, while I was in quarantine here. So, I did very little shopping, but I did it off of Instagram, which is very interesting. Let's expand this. Let's take a look at some of the other names, right? Twitter and Google Alphabet, maybe Pinterest or Snap. Jim, did you have some thoughts on some of those other names?
Yeah, I do. I mean, I think one thing that distinguishes Facebook and also Google and its YouTube platform is the so-called direct response ads. Now, anybody who's been on these platforms knows that they have an eerily accurate way of identifying what you're into, why you're into it, and what you might need. And so it's not surprising that the algorithms are working super well on those advertising fronts. But Twitter has been one of the companies that hasn't been able to do so. So I don't know if they just don't have the right algorithm, or maybe it's not the right platform. But I do know that Jack Dorsey and company are working. They're spending a lot of money on improving their internet ad technology. So maybe that kind of algorithm improvement will help them. But if you're looking for the direct response advertising revenue, Facebook and Google are the two best ways to go.
Caleb, I know you have the Investopedia Anxiety Index that you take a look. I mean, this could show if we're getting closer to a more back to normal lifestyle, which would include the digital advertising for some of these names. Tell me what's going on here.
Well, it unfortunately not telling us that at all. It's telling us that people are extremely concerned about their personal finances. The anxiety index measures the traffic we get to fear-based terms, whether that's around the markets, the macroeconomy, or around personal finance. And the markets and the economy part of the anxiety index are pretty chill right now, but the personal finance one is screaming like a 2-year-old because people are very concerned about liquidity. They're concerned about foreclosure. They're concerned about potential bankruptcies in their own lives or in the businesses they work in. So that personal finance fear has been creeping higher, and it set the index to an all-time high. And that usually precedes the VIX in volatility. Volatility's been very chill over the last several weeks that we've had this amazing rally. But that fear, that personal finance fear, is going to rein in spending, and it could end up impacting stocks, which have been on an amazing tear since March 23rd.
I expected, I got to tell you, I mean, I saw that it was off the peak, but still pretty high there, Caleb. I expected it to be a little better only because other numbers have been improving, right? Like joblessness. And here's a look at the VIX right now, which is down 1.3% at 25. Jim, you said you recommended Facebook to your readers, to your followers. Tell me what else you were recommending, or maybe the other side of it, the stay away from, do not buy this stock. I mean, what else did you recommend today?
Well, today, about 2 weeks ago, I recommended a Thor Industries, the RV maker, and it's already up 45% since my May 7th buy. So we're doing pretty well in that one as well. And the thesis here on that is that people still want to go out and vacation, but they can't go to hotels, they can't do cruise ships, they can't do the other things that they normally would do, but they can certainly get in an RV and drive around the country and see family, friends. They know they got a safe environment. So I think that is a stock that, despite its big run up, it was just up almost 19% this week alone. So it's gems like that you need to unearth, but you got to have of course, you have to have the crystal ball to do it.
Good recommendation there. A good recommendation, Jim. And you know what? Winnebago wasn't that far behind, too. 1 month change for Winnebago is up 45%. Good to see you both. Great conversation.
It's at 2020.
Caleb Silver, Editor-in-Chief, Investopedia. Jim Woods, Editor, Intelligence Report. Thank you both.